Yo, what's up, everyone? It's August 6th, 2021. It's been a minute, been about 3 months since my last video. Just had to take a break from making videos for a while. I was going a little too crazy, putting out videos, multiple videos a week. Just had to take some time off mentally, and the market was messing with my head a little bit as well. Just seeing paper losses just messes with you, man. Throughout the summer lull, just had to take a step back, reassess my emotions, my feelings, and everything. But I'm here. I'm blessed. Everything's good with work, my family, my health. My girl's good, so everything's good. Looks like the crypto market is possibly at a turning point to resume upwards, but we'll wait and see. So I just want to make a video today about the charts and where we are in the market today. Hope you guys are all doing well. Thank you for tuning in, for whoever it is, and you guys are my family. Thank you for watching this. So let's start off with Bitcoin here. Just a lot of stuff happened, man. Like, let me just take off the charts. But yeah, we spent a lot of time when I started making the videos up here from February to about April, May. We had 3 months in this like 45, 50K region all the way up to 65K. And you could see that this is just looking back in hindsight now, but just looking at the momentum on the moves up, it was dwindling, right? So you can see here from where we're at, like 45, 46K to 58K, and then from here like 50K to 60K, and then here like 56 to 63. So you could see the momentum was waning on the moves up, right? And think about it on the way down, on the sell-off when we broke. I think my last video I was saying caution if we break a level around here, and of course we broke it down from it and then started the sell-off, right? But the sell-off started, maybe went down to 30K here, but then it bounced. But you could see, similar to what we had up here, the momentum on the sell-off actually started decreasing. And then this is probably like the most worrisome point right here, July like 20th, July 19th, when we were breaking key levels. We were breaking like this 31K 30 level. We never closed below it. And then the volume was a little bit over the 20-day volume average. So it had me a little bit worrisome. And then we closed this candle down here, also below any other close that we had previously, but it was still within the wicks of these days. So we technically didn't lose a range, but I was being more cautious and a little more worried around here. So I did sell some alts in here just in case we broke down lower. Hearing a lot of talks about 24K, 20K or lower. It just messes with your mind, right? So you want to lock in something. Just locked in some profits, even though I sold at a significant loss from what it was up here. And then just kept some bread, and just in case we went lower, because you never know in these markets. Things can go up faster and things can go down lower than what you thought was possible. And then after that day, when you, of course, when you sell at the bottom, things start to reverse, right? We got some strong volume starting here on like the 26th on this candle, and then we kept going up, and then looks like we retested the EMAs here. Looks like this is a 20-day EMA, bounced right off it, and we're continuing up. So let's turn back on the charts. Sorry, it's a little messy. So what I'm starting to do now differently is I'm using fib levels. So you can see here we did drop about like 55-56% on Bitcoin from the peak around 65K to about 29K. 56% drop. which is kind of similar to what we were seeing in the 2013 cycle. So a lot of people are comparing it to 2013, but of course each cycle is different, where you had a big drop during the summer. So the way you draw fib level, so you can just, we're on TradingView, the website uses a chart, there's this fib retracement tool right here. So you just click it, and then you can draw it from the peak right here, and then you draw it down to whatever level you want it to be at. And then these somewhat act as like resistance and support levels as well. It's key levels that you can see kind of almost line up. It's crazy with levels that you already had drawn. So the bottom here around 29k basically, and then we already cleared the first fib level, the 0.236, and then the second fib level that you have here is 42.6, and then we're busting through that right now. Looks like we're around 43.2k, and then the 50 level is kind of key, the halfway point to get back to the all-time highs, and if we hold that, you would assume to test the highs, to retest the highs. So you can see these levels almost line up with resistance levels we have marked here throughout this whole cycle. So Bitcoin's looking good. Remember, one thing we used to look at was a Bitcoin dominance chart. We're on the weekly chart here. This was just a daily chart on Bitcoin, but if we zoom in, you can see this whole move up. Look at the volume right here, strong volume, and then we're having some decent follow through on the volume here as well. Continue to move up. Ideally, you would want to see like possibly more volume on this move, but we're on Gemini exchange, so let's look at Coinbase. Coinbase had a little better volume. So to confirm the strong move up, you always want the candles to close above key levels, to be above other candles, and you want volume to support it. So this chart's a little cleaner. I got like 44k, 46k, 49k here. Clear this level like 51, and then you can head back up to like 58 and retest the highs. But the thing about Bitcoin dominance, this chart actually doesn't look that good. It looks kind of bearish to me. On the weekly chart, Bitcoin dominance, you could see this level or this area right here. It has been consistently been getting rejected. So I'll just draw a box to where these candles are wicking at. So like around this 50 level on 50% Bitcoin dominance for the entire market, you can see these wicks. It keeps getting rejected, right? And then the RSI, I don't really like to use RSI, but we're on the weekly. It's just another indicator to further your thesis on what you believe is happening with price action. We're not even at the 50 level on RSI yet, and we're kind of rejecting it. So 50 is like the midway point between 30 of oversold and 70 overbought. So I like to mark the 50 range, and to see if we're holding above it, then I maintain more bullish. If we're below it, I maintain more bearish. So it looks like the wicks to the top have been rejecting for Bitcoin dominance, thus setting the stage for altcoins possibly outpacing Bitcoin in the short term. And now let's look at Ethereum. Altcoins always follow ETH, but Bitcoin sets the stage for the entire market, of course. So let's look at ETH. Looks like from the parabolic euphoric run, man, all the way up here, and then we had the huge sell-off. We dropped from 3.5k all the way to 19k in one day, man. That's insane. And then so a sell-off, bounce. We were unable to break and close above some significant moving averages. Oh, we did break above here, and then we got rejected by the blue, which is the 50-day SMA. You see how we got rejected? But here we finally, just last week or end of July, we finally broke above it. and then we had strong volume on this day. Even though you see the wick on this candle right here, you want to see how the follow through is on the next day. And then we had good volume, follow through candle to close bullish, and then we've continued up. So even the volume on ETH has been pretty solid this whole move up. And then so we had a double bottom around 1.8k, bounce at each time, even wick down to like 1700. You're hearing a lot of people call for 1559 on ETH to match with EIP 1559, 1400, 1200 and lower, whatever. But when you hear that constantly on Twitter and analysts that you follow, like, it messes with your head, right? So what you gotta do is just follow price action at the end of the day. Nobody knows, nobody truly can predict what's gonna happen in these markets. So you just gotta stick to your own analysis and be fine with your own decisions at the end of the day. So here, like I said earlier, I've been using these fib levels, but ETH from like 4.4k, it actually dropped more than Bitcoin, right? Bitcoin dropped 56%. Now ETH, we're seeing here to the lows was like 61%. But I had this trend line from May that was holding ETH's price down all the way from May, June, July, but then it finally broke it like on July 27th, 28th right here. And then you can see there's some pretty decent volume on this move up, and looks like we're increasing on volume as we're getting up here too. And then I just have some strength resistance levels drawn out. So right now we're at resistance. I would more so wait for it to possibly make support again around 2700, or to see if we flip this 2900 level and make it as support and then move up. But based on the fib levels, we already broke through the first fib level here at 2.3k. It really lines up with a resistance level, and then we broke through another fib level correlating with the resistance at 2700, and looks like the next one at 50% fib is at 3k, then 3.4k. So these almost somewhat line up with support and resistance levels we have here. Alright, so ETH is actually about to touch the 0.5 fib level. Let's look at Bitcoin. Where is it at? Bitcoin still not even, well, it's almost there, but ETH is a little closer to the 0.5 fib level. So ETH's looking a little more bullish than Bitcoin right now. And then if you look at the Ethereum Fear and Greed Index, right now we're turning into somewhat of a neutral, more greedy area, but you'll remember when you're at the 4k level, we're all the way up here. That's a clear sign that you should be more cautious or take some profit when you have friends hitting you about crypto that you know nothing about crypto or stocks or whatever. You know it's time to sell or take some profit. So don't get caught up in that again. Next time if we do get up there, just be smart, take some profits so you can sleep well at night. And looking at Bitcoin, so Ethereum was 58, right? Bitcoin is just neutral at 52. So Bitcoin still hasn't even truly started being incredibly bullish yet. ETH is ahead of it right now. And the Meyer multiple, I might have shown this before, is like this index or indicator that tracks how close Bitcoin price is to the 200-day moving average. So the 200-day moving average is around 44.8k, and the Meyer multiple shows we're at 0.95. So we're 0.95 of the way to this price, but the average Meyer multiple is at 1.45. So we're still significantly low if we're at 0.95 and the average is at 1.45. It's been historically higher 70% of the time. So even though Bitcoin has moved up from 29K, we're at 43K right now. It's technically undervalued if we're basing it by this multiple. Alright, so we looked at Bitcoin dominance earlier, but we know the altcoins are driven by Ethereum. So Ethereum can mainly pull, if Ethereum is bullish, it'll pull all the alts with it, right? Looking at altcoin market cap dominance, remember how we talked about Bitcoin dominance being the RSI below 50%? Look where we are at for altcoin. We're at 59 right now. So altcoins are significantly more bullish than Bitcoin right now. And you can see I have this trend line drawn. We're on the weekly chart. The weekly close is going to happen on Sunday the 6th, and if we break through this trend line and flip this like 54 area into support, I could see alts making an even more bigger bullish move to the upside. And we could look at altcoin market cap as well. You can see here, looks like once we break this level, this is just a total value of all alts. We can head back up to the highs. And total market cap here, so this is just pure alts. This is total market cap including Bitcoin. We're at the 0.382 level. And then next would be the 50, and then each level as we move up. But you can see here, total market cap, we bounce right at the 50 RSI level, and looks like we're moving up, possibly. I wanted to highlight some videos about some interesting things that I found from watching these videos today, and some possible concerning points and things that were shown or predicted from the Wyckoff distribution and Wyckoff accumulation patterns that had played out. So this first video is from Benjamin Cohen. It's a great analyst, puts out videos daily. Go and follow him. He talks about, in this video, DXY. So DXY is a US dollar index, and historically, if DXY is going up, so the value of the US dollar, that means assets such as equities, crypto, real estate, whatever, can possibly go down because the value of the dollar is going up. So the assets move in the opposite direction because people want to put their money more back into dollars. And you'll see there's possibly an inverse correlation, and he'll highlight it in this video.
The US dollar currency index, that is the battle going on, and it might not be intuitive for everyone to realize that, okay? Why is it? Well, remember back in May, I said, expect a 3 to 6 month lull in the market, or expect because we're ahead of schedule, but expect a lull in the market because we need to calm down for a while. What happened in May? Well, first of all, we dropped below the 20 week, but look at this. We dropped below the 20 week on May 10th.
So this is his indicator called the bull market support band. This red line right here is the top of the band, and it's a 20-week moving average, and this green right here is a 21-week exponential moving average. So the 21-week are the difference between EMAs and SMAs. EMAs are more weighted towards more recent candles, but 20-week EMA is equally weighted between the past 20 weeks. So his thesis is once we break into the support band, you want to break above this red line, break above this whole band and hold it as support. And you can see here, once we're above that, it was bullish. So that's what he's mainly looking at right now.
If you go look at the dollar started finally having this local bottom around May 10th. So when the dollar's going up, it's not good for Bitcoin. Okay, it was not good for it here. It was not good for it in 2018. It was.
So when the dollar is going up, it's not good for Bitcoin, which is not good for the crypto markets.
Not good for it in 2014. When the dollar goes up, it's generally not good for Bitcoin. The reason why this is a key battle is because the dollar has moved up, but it's starting to slow down a little, okay? You can see that like in late March, it's starting to slow down right around that same area. So for Bitcoin, in my opinion, for Bitcoin to have a sustained move to the upside and then go on a crazy, crazy rally, etc., you do not want to see the dollar put in a new high. You do not want to see the dollar break out, right? You do not want to see this if you want to see Bitcoin go up. Okay, so what you should do, you should go over and add DXY to your watch list and keep an eye on it. If you see it.
So you said add DXY to your watch list, right? I've been watching DXY forever. It's still even important with stock markets, but let me try to fix this. So yeah, there we go. DXY looks like possible double bottom. Could be like an accumulation, but hopefully we don't break up past this 93 level and go to the upside. You see how high we were here in March 2020. Remember March 2020, the start of COVID? We were up here, 102. And then what happened when it started to sell off? All the stocks and everything went up during this whole time when DXY got rejected. Right now, it's kind of worrisome. If DXY can break up, I would expect Bitcoin to not perform as well during that time, if it does happen.
Rallying this way, it's going to make it exceedingly difficult for Bitcoin to rally. If the dollar is coming back down, then it makes it really good for Bitcoin. Now, if the dollar does get rejected, okay, let's dubiously speculate, which we like to do on this channel. If the dollar comes back down, then the next question, is it going to hold this level? Okay, is it going to hold that level? Because Bitcoin has not really put in, any crazy new all-time highs in several months, right? I mean, we have to go all the way back to April. So then we look at this and we say, well, what happens if it goes below? This is a zoomed in version of the dollar chart. What if we zoom out? What if we zoom out? This is the dollar, going back all the way to the 1980s. And what you'll see is, there have been key momentum shifts in the market, right? Here it went down, here it went back up. Here it went down, here it went back up. The question now is, are we on a longer trend down, or are we going to kick the can down the road a few months? Okay, now we must think about something here. A lot of us are used to looking at shorter time frame charts. We look at weekly candles and monthly candles, but that doesn't necessarily prepare you for this chart. Because again, this chart goes back to the 1980s. A lot of you probably weren't even born in the 1980s. I wasn't around until the 90s. So you have to remember that this chart goes back a long time. So a little squiggle here, while it might not seem like anything, it's a huge deal for Bitcoin. If Bitcoin were to go put in new all-time highs, and let's say push 100 to 200K within the next 1 to 2 years, what does that mean? Well, it means the dollar's probably not holding up so well. And if the dollar's not holding up so well, then maybe it's falling below this local low. Okay? And if it does, it's almost like clear skies, or the reverse of that down below. Because up here, we were in the 130s for the dollar, down here to the 80s, back up to the 120s, back down to the 70s, back up to the 100s. And then the question is, are we heading back down to these lower levels by the end of the decade? Right? Is that going to happen? And if so, it likely means that crypto and stocks will continue to do well. Bitcoin.
Yep. So basically at a key level here, if it rejects and drops back down, we could see continued growth in crypto and the stock market. All right. So inverse correlation with DXY and assets. And here is a video from Uncomplication. He predicted the sell-off based on a Wyckoff distribution pattern here, and then he's going to highlight how the Wyckoff accumulation pattern is playing out to the T here too. This was really interesting.
Shock that I felt in discovering and charting out the Wyckoff distribution that really made the case for this market is moving like traditional markets move, that this huge markup phase was really in the interest for the cause of the large holders. They were able to distribute their holdings over a period of months and then drive the price back down to scare everybody into selling what they had just bought at a markup in a markdown phase. And now again, we're seeing just this wildly close to the textbook. Let me bring up the textbook image here. Just as we had this highly textbook distribution initially, here we are again. We've had the selling climax, the automatic reaction, the secondary tests, all the way into this moment that kind of looked like potentially this spring, and now we've been marching back up. And so these are just lines on the chart. I draw them just based on the high and low wicks, but just looking from left to right here, you can see once again we have this really compelling diagram that seems to suggest we might be in the late stages of an accumulation phase. Now, as I've said, there's other diagrams for redistribution. You don't actually know whether something is going up or down, no matter what the model says. It's kind of foolish to be completely dependent on these types of predictions. These happen at large and small scales. It's just part of how a market moves and how large operators can get the most value for the assets that they accumulate and then eventually distribute. It does kind of serve to say that, we are in a market that is attempting to take advantage of those who aren't paying attention and who are only listening to the hype and the fear and the greed. And they're going to succeed at that because most people are only
So just wanted to highlight how this is kind of playing to the T of the Wyckoff accumulation pattern as he showed, and see if it plays out, if we break above this 43k level, hold it as support, and then continue our move up into the highs and the high 50s, high 60s, 60k region. Alright, hope you guys found this video useful. First one back. There's some more content that I want to put out about like security and maybe some interviews, so stay tuned. Hope you found some useful information. If you guys didn't sell out of the market, I hope you bought more, or you just stayed put with what you had. Hopefully we'll keep going back up. Alright, have a good one. Thanks for watching. Peace.